All right, so here's my weekly portfolio review. So as you can see, my total equity is up to 84,290 right now. Now remember, this before the 2020 crash, this was up to 107,000. Now if I go into the trading platform and just look at my portfolio, each account, so it's really clean right now. Look at this margin account. I only have put credit spreads on the SPY. If I look at the TFSA account, I only have shares of Q. And IMGN is something I'm trying to get rid of, but I'm going to have to wait till July 17. But eventually I'm only going to have Qs in here. In my RSP, if I look in my RSP, I've got IWM only. And if I look in my RESP, I've got Dell, which is probably not an ETF that tracks the index like what I have in my other accounts. But because I don't have enough money in this account to buy 100 shares of an ETF that tracks the index, I decided to buy a company that I like, which was Dell. But I'm doing well with it because I keep selling call options on it, but I'll get to that. And any leftovers, I'll buy quality names like MasterCard. I've got some MasterCard over here. And the other choices that I would buy is either JP Morgan, Walmart, Costco, Microsoft, Apple, American Express, Visa, Coca-Cola, and McDonald's. So if I go to my margin account, so you saw that I only have put credit spreads on the SPY. So if you watched my video on my 2020 investment strategy, you know very well that the only thing I'm doing in my margin account is selling put credit spreads on the SPY every Monday, Wednesday, Friday. So I've got a few, and I actually closed a few as well this week. So last week was April 20th to April 25th. So you could see, if we look at the first five so you can see the first one here, April 20th, this was a put spread expiring May 20th that I opened. So this is a new trade that I opened at a 255 strike, collected 80 cents or $80 because I did one contract. So times 100 shares, that's $80. And then you could see April 22nd, which was a Wednesday, I opened a put spread expiring May 22nd at a 250 short strike on the SPY, collected 81 cents this time, or $81. And then April 24th, which was a Friday, if we go to the first line here, you can see that I opened a new put spread on the SPY expiring May 26th. So it's always 30 days away. And this time it was a 259 strike. So you can see that these ones had a 255 strike, this one had a 250 strike, but this one I went with a 259 strike, collected 90 cents or $90. But these two lines over here, you could see that these were closing trades. I paid, so you can see DR here stands for debit, CR stands for credit. So these trades, I opened them for a credit. I got money that came into the account, but the trade is not over because I still have to close it. Either I let it expire worthless and I keep the credit, or I close it for less. So what I normally do is I try to close it for less. I try to close it for 50% of what I collected. So here's an example of closing it for 50% of what I collected. So on this line here, May 15 expiry date, it was a put spread at 250 strike. I closed it for 41 cents. And this is May 15. So if I go lower, I can see that May 15 is right over here. I opened this one, April 15, I opened it. I collected 83 cents. And then April 24th, I closed it for 41 cents. So you could see that I closed it for 50% here. It took about 9 days to close it instead of the full expiration of 30 days. And then this one here, May 13 expiration, I closed it for 44 cents. And if we go lower, you could see that I opened it here, April 13, collected 88 cents with a May 13 250 strike. Collected 88 cents, and I closed it for 44 cents, April 24th. So this one took about 11 days to close, but as you can see, 50% of the premium collected. So that's my plan. That's the idea with my margin account. Basically, this week I confirmed 2 put spreads. I confirmed some profits. Dollar-wise, it's not a lot. It's like $40 times 2, so about $80 confirmed in profits. But percentage-wise, it's pretty good because the capital required to open these trades, these put credit spreads, is less than $500. And I'm collecting $40, and I'm making it in sometimes 1 week or 2 weeks. But it's also very effortless. I'm not touching it. I'm not looking at it. I just put the trade on, and then just in a matter of weeks, I get to close the trade for 50%. As long as time goes by, and the SPY goes up. If we bring up a chart of the SPY here, so I put the trade on, and all I have to do really is I let time go by, and as time goes by, the option premiums decay, so I'm able to close the trade for a profit. And sometimes it can happen earlier because the stock will go up. So if SPY goes up, I'm able to close the trade even earlier. And with this ridiculous market, things don't make sense. Market is going up when it's supposed to be going down. I'm able to close these put spreads earlier for a profit. And I still have 4 more put spreads open, expiring May 18, May 26, May 20th, May 22nd. And they all have different strikes: 250, 255, 259, and 260. Most of them are showing a small profit, but they're not ready to be closed at a 50% profit. So that's my margin account. But now in my TFSA, this is where a small problem, a small hiccup. I've got covered calls on the Qs. So basically I buy 100 shares of the Qs and I sell call options against it. So why do I do that? Because if I just buy the Qs, buy and hold, in my opinion, doesn't always work, because yes, the last 5 years was perfect, but as you can see, if we look at 1 year, basically this crash here erased almost all the gains of the past year. Actually, look at this. So in 2001, you could see the stock was at 64, and then it went all the way down to about 23, and then went back up to 55 in 2007, and then we crashed in 2009, and then it took about, in 2012, it surpassed the 2001 value. So if you were just a buy and hold investor, you would have waited almost 11 years just to be at neutral on your investment. So that's why buy and hold for me is not enough. You have to add something to it, either dividends or covered calls. So I totally agree that buy and hold in the long term is the best investment. It's easier, less stressful. Your money will grow for sure in the long term, but it's just not enough to do it alone. So I like to add covered calls to it. So that's what I'm doing. I'm selling call options on the Qs. So basically the consequence of that is, by selling a call option, I limit my upside. If the stock is trading above my strike come expiry date, then I'm forced to let go my shares at that strike. So if the stock right now is at 213, my strike is 208. So I forego the 213 minus 208. I forego the extra $5 capital appreciation. So that's the risk of covered calls, is it caps the upside, but it generates income on a weekly or monthly basis. So while I'm selling calls, I'm collecting premiums, and there's ways to avoid getting your shares called away at a lower strike. I just keep rolling the call option forward with the hopes that the market does drop, and then the Qs that do drop below my 208 strike eventually, because this is really a crazy rally. It's not supposed to be going up this fast. So anyways, let me show you how much I've collected in call options just on the Qs. So you could see that just in call premiums, just by selling call options every month on my position that I plan on holding forever. So 50 cents last week, 60 cents the week before. So this is every week. So 50 cents, 60 cents, 50 cents, 40 cents, 30 cents, 28 cents, 35 cents, 35 cents, 39 cents, 25 cents, $1.20, $1.25. So all this multiplied by 100, 50 cents. So it's about $600 in total, maybe a little bit more, just by selling call premiums since February. So it's definitely better than holding the stock and not doing anything. In my RSP, same thing, but I'm doing it on IWM, which is the ETF that tracks the Russell 2000. So you can see on the stock itself, I'm down 2,900 because I bought it at 151. But I've been selling call premiums ever since. And if we look at how much premiums I've collected on IWM since buying it, so if I filter on IWM in my executed tab, so you can see 39 cents, 40 cents, 50 cents, 26 cents, 21 cents, 38 cents, 30 cents, 25 cents, 34 cents. This is actually times 100, so it's actually $39, $40, $50, $26 every week. $34, $55, and this is since I think this is since March. Yeah, since March or February 28th. This is when I first got into this position. So right now I'm actually sitting on, so right now my next covered call or my strike is 129, expires May 1st. So next Friday I hope that IWM does not trade above 129. Right now, IWM is trading at about 122.4. So it has a good chance, I think, of trading above 129 with this crazy market. But if it acts normal, it should stay below 129. If it does go above 129, then I'm just going to have to buy back this call option and roll it forward to the next week, and usually for a slightly higher strike. So maybe I can go for the 130, 131 strike. That's if IWM is trading above 129 come May 1st. But if it's trading below 129, then I could probably sell the 135 strike for the next week. And in my RSP, I've got Dell. It's doing well. I'm selling call options on Dell at a 40 strike. I bought it at 39.66. Got 100 shares. And let's look at let's look at call premiums I sold on Dell. Let's just look at one thing here. So if I bought Dell at 39 and I did nothing and I just bought it and held it, right now I'd be up only $3 on the underlying position. I bought it March 6th. We are April 25th and I'm only up $3. But because I've been selling call premiums on Dell, let's look at what I've been collecting. Collected 90 cents or $90, $124, $170, and the first trade here I collected about $45. So $45 plus $90 plus $124 plus $170. So these are all premiums that I collected that are mine. I get to keep, and much better than just holding the stock and not doing anything. And because of course I don't have enough capital to do more covered calls, so I just buy quality companies like MasterCard, and this is something I'll just keep forever. The RESP account anyways is a long-term investment, at least 15 years. So I don't plan on selling anything or withdrawing anything before 15 years. So I think MasterCard in 15 years will definitely be above 275. So I think it's a good investment for me. All right, so leave your questions in the comment section below. And remember, if you're going to open an account with Questrade to trade on the stock market, I've got 2 referral codes that you can use. One of them gives you up to $250 back. The other one here gives you $50 in free trades. So which one should you use? It really depends on how much you're depositing. So let me just show you something here. If you open an account with Questrade and you want to refer people, you want to refer your friends, you can get $25 for referring people. And a lot of people ask me, where do I get that referral code? It's actually very simple. You go to accounts. So usually you're in trading platform or trading section, go to the account section and then go to account management and then go to refer a friend. And that's where you can get your own referral code once you open an account with Questrade, so that you can refer your friends and get $25 for referring people. But right now, if you use my referral code, here's what you get. If you deposit $1,000, you get $25. If you deposit $10,000, you get $50. If you deposit $25,000, you get $75. If you deposit $50,000, you get $100. If you deposit $100,000, you get $250 back. So if you're going to be depositing less than $10,000, then use this referral code here, because it'll give you $50 in free trades. You'll get more than $25. But if you're depositing more than $10,000, then really this referral code here might be best for you. This one here, because you'll get more than $50 in free trade. So based on your deposit, choose your referral code wisely. Now, where do you enter that referral code? So when you go to Questrade and you click open an account, and then you're going to select the account. Let's say you select the TFSA. This is where you put your referral code right here before opening now. You put your referral code, click apply, and it tells you what you're getting. All right, thanks for watching.